Monday. Good morning. I hope everyone is all good. There's a fair bit to run through this morning, so you need to bear with me. Just give me 2 seconds. There we go. Right. Yeah, a fair bit to get through this morning, so I'm not going to sit around and stand in ceremony. First things I want to cover are the pound pairs. Obviously, we've seen pushes up this morning. As a result, the landscape has changed ever so slightly. Basically, what we're looking for when it comes to pound New Zealand at the moment is this 194.20 level. This 194.20 level holds the key to all the downside movement. Now, if we obviously end this 4-hour candle as an engulfing formation, that might all go out the window and we look towards those longs back towards 198. Now, the difficult thing with pound New Zealand at the moment is that we're in no man's land. We're trapped in between this little area. And I use the word little very lightly. Obviously, it's about 200 pips. But there is no high probable trade or highly probable trade until these levels are taken out. Yes, we can get involved in a position from somewhere around this low region. So taking into account these previous lows, previous highs. So somewhere around 95.50, let's say. We can get involved in a position around 95.50, but there's no probability to that. Plus the fact that by the time we get into that position, you've got 50 pips up, but you're going to need at least a 50 pip stop loss, I would imagine. Let's say that we get involved at the 50 level, 70 pip target. At the moment, you need 100 pip stop loss. That's not going to work. It is completely illogical at this point in time to look for any positions surrounding pound New Zealand until these two levels have gone. 196.20. We will be able to see it. 194.20. Until those levels are taken out, there is absolutely nothing that is worth looking at the moment. For the most part, we just need to sit on the sidelines, wait it out, and see what happens. We've obviously seen a lot of sharp pushes and movements up this morning. And obviously, as a result of that, we need to be a little bit mindful of snapbacks. Obviously, it is Monday morning, and we are seeing the London sessions, pre-London and European session opens. So we're seeing a flood of liquidity come into the market. It can be very, very easy to get drawn into positions early on a Monday morning, but it's the first couple of hours of our trading week, so we don't need to get caught up in things that aren't necessarily going to be high probability, or that we're going to be trapped inside of most of the week, taking up valuable liquidity, valuable margin off our trading accounts, and having our risk allotted in too many things too early. Pound New Zealand above, we go back to 198. That's almost a given no-brainer. We'll probably see some resistance around 197. But 198, and I would almost go as far to say now, and put it on a limb, that if we were to bounce back above 198, then we will go all the way to the whole number. As a bare minimum, find ourselves into this area of previous resistance / support. So it's a make or break kind of area. That 196 region is a make or break for this pair. If we break back above it, then obviously it is long gone. Also, what we're looking at from this 194.20 region is that 194.20 was the perfect area for us to see a new higher low form, and therefore obviously likely to see a push back to the upside also. So breaks above 196, that does open the floodgates and will probably likely lead into a lot of positions. It's not that I believe in either side of this position or either side of this trade at the moment. However, obviously, if we do get an engulfing candle here, and we can get a close back above 96, there is a no-brainer that I will be involved in potential long positions. Now, the reason that I also want 196.20 to go or believe that 196.20 needs to go, is because we're likely to see price come back and retest around this area, so 95.50, that 95.80 region, somewhere inside of this noise through here. We're very much likely to see the pair come back and retest that area. From that, then we can obviously start to think about where we might head to next. If obviously we see rejection away from there, then we do have the opportunity to trade back towards the downside. If we break back above that 95.80, then that's our first warning sign that that's 96.20 area, and a night position from 96.20 makes the most sense. So there's a lot of things and a lot of opportunities riding around that zone that we do just need to be very, very mindful of. So yeah, I think that kind of covers pound New Zealand. I want to go through pound CAD quickly. There is CAD fundamentals today, this afternoon, maybe 3 o'clock. Again, we've seen a sharp push up, but we're doing nothing more than retesting this area of a breakout at the moment. So for all the time that we're still trading around this region, so trading below kind of 72.80, the short plays are the most favourable options here. Obviously, we saw the breakout from 73.20, push back down. We've never really come and retested that area, so that's something to be very mindful of. But we're breaking through this region, coming back, retesting. If we can find some resistance here and get a close somewhere around 72.20, then that would be pretty significant confirmation on the fact. I'm not talking about this half an hour close, but just in general, a close around 72.20 would be a pretty deciding and confirmation that we're likely to see 71.80 tested. And obviously from 71.80 we can blast back to the downside. If we break back above 73, then it's pretty clear that we're going to come back to 73.50. However, I would prefer to wait for 73.50 to go before entering any potential long positions. Everything in between seems a little bit too choppy. If we were to break back above 72.80, maybe 72.60, then perhaps we could think about taking early entries on a long. But I would really like to see a fresh swing for that to happen, and a real confirmation that we're failing to break the lows. As things stand, obviously we are clearly in a downward trend. We've broken the lows. Coming back to retest this area around 73 makes a lot of sense to see a potential new lower high before seeing a push back to the downside and breaking through. So surrounding these pound pairs this week, it's just about patience and sitting on our hands for a little bit, letting these play out. Obviously, we've seen mass liquidity come into the market, and we're starting to see some huge engulfing candles. That in itself is obviously a warning sign that we're potentially heading to the upside. When we see momentum like this, but we do need to be very, very mindful. Certainly with pound CAD, because that looks the most favourable for the short. But definitely when it comes to pound New Zealand, also there is definitely room for pound New Zealand to go either way. So we do just need to be a little bit careful and a little bit mindful of these positions and how we play out. EURCAD and EURAUD are two pairs that I want to run through very quickly also. EURCAD obviously is something that we've been watching and taking advantage of for a good couple of weeks now. Ever since we saw the breakout from 150.50. Now, I'm fairly comfortable and confident on the fact that we're probably going to return to this area now. And 150.50 is going to be refound and retested. And in actual fact, we're probably likely to break back above and start to head back towards 153. With that being said, obviously we cannot discount the fact that the pair is going to pop back to the downside. Euro's not been amazing. Canadian dollar's been pretty strong as of late. I think we just need to see some fundamentals change or some economic outlook to give us an indication of where price is likely to head. Data charts typically follow the data and the numbers eventually. So looking at possible entries or exits and things with regards to EURCAD, drops back below 149. 149 to 148 seems pretty much a given if that opportunity was to present itself. If we don't drop below 149 and we break back above 149.50, then at 149.50 we would have the opportunity then to take a potential trade up to 50-50, and then obviously from 50-50 that's where the real fun will kick in. If we can break back above 150.50, then as I say 153, 153.50 are the next targets for us. It might take us a couple of weeks to get there, but the chances are that we will get there eventually. So we just need to be mindful. For all the time that we are still trading below 150.50 though, I do prefer downside targets. I just think that was such a key level to break through that once we had got through it, it was going to take something special to get back above. If we can see that, then happy days. Like I say, we can take full advantage of trades above back to 153. If we don't see that, breaks below 149 would give us 148. 148 back down to 146.50. 46.50? That sounds about right. So we have potentials there. Euro Oz. Something similar also. This is slightly alarming. I wasn't expecting to see this. This had broken through so well this morning. Come to the 4 hours shows it best, I think, with regards to Euro Oz. Obviously, we've been in a pretty steady incline, breaking the highs. 156 was a big area for the pair, and we've broken back above that level now. From 156, I think it's pretty clear that we go to 157 and then 158.20. It's just whether how quickly we decide to get there. The pair's been moving quite sharply and very quick for the last couple of weeks, or at least certainly throughout the tail end of last week, middle to tail end of last week. Obviously we've seen sharp pushes. Now I think that we could probably be in line to see another pretty quick push up this week, certainly as this is closing. If this closes back above, I don't see any reason as to why you wouldn't want to take the long from here. Coming back in, and we were kind of retesting a region. Oh, that didn't click. We're retesting a region of previous resistance and previous support. So the fact if we break back above there, then I think that's a big key for the pair. And obviously above 156, you've got 156.50 and these previous highs, then 156.50 up to 157. So there's a pretty gradual and continual target region for the pair at the moment. If we were to break back below 55.80, then that might give us an early indication of possible breaks back down. But I think in truth you need to get below 55.50 in order to be looking for that potential. In fact, I am just going to add an alert at 155.50. And I'm also going to add an alert at 156.20. We've got an alert on EURUSD as well. That's cool. So yeah, there's certainly potentials surrounding those at the moment. Swiss yen. The Swiss franc has been on a bit of a tear over the last couple of weeks, and obviously the yen has been completely blown over. Now, the Swiss franc, there is a speech from Swiss government. When is that? I don't know if that's not today. No, maybe tomorrow. Or maybe even not then. When is it? There's a speech from the Swiss government at some point this week, and that is very uncalled for. Uncommon, should I say. Not until Thursday. Very uncommon, doesn't really happen, so that will be very, very interesting to see what happens as a result of that. 118.50, massive level for the pair. If we come out to the daily time frame, you can see that this, I'm just going to run a level all the way through, to be fair. So you can see with this 118.50 region that we have not broken back above this or for a very, very long time. So we're expecting to see something occur around this level. Now, if we pop to the upside, happy days. We've got huge upside potential targets. 120.50 to begin with, then obviously up to 122 thereabouts, 124. Huge targets for the pair. If we reject, which we are starting to see signs of, unfortunately it had already happened this morning, so there's no real way to take this position unless you were awake. For now, what we would be looking for is breaks back below 117.70. Breaks below 17.70, 17.60, somewhere around that region, will also lead into sell-offs, and quite drastic sell-offs at that. If we come back out, you can see that we're likely to come all the way back down to 116.20 as a bare minimum, or 116, and then obviously from there we can take potential profits off the table, look to enter below 15.50, and then obviously ride that back down to 13.50 and then 12.50 in extension. So we have a lot of potential in the pair. We just need to get through one of these two entry points at the moment. So 18.50 or obviously 17.70. Those are the key levels for us at the moment that we need to see taken out before we look for potential trading opportunities. However, there is huge potential surrounding this pair when those levels go. This is very similar to like the pound CAD and EURCAD moment that we saw last month, when once these massive levels that haven't been broken down in years are taken out and retested, we're going to see big movements. What did I want to look at? EURUSD I wanted to have a quick look at. So euro dollar around this 118.80 region. Obviously we've spoken about it numerous times previously. 118.80 is a massively key level to the pair. In fact, 118.80 and 119.20 are the two levels that we need to be most interested at the moment. 119.20 is taken out, then we have a return back to 120.20. Yes, we have this little minor area at 19.50 to contend with, but apart from that, it is free sailing through to 19.20, and we've spent so much time messing about that will probably happen quite quickly. Below 18.80 is obviously where I would start to consider shorts back down to 17.50, and then obviously a little bit lower in extension to that 116.20, I believe, if memory serves. Yeah, 116, so 116.20 probably likely to come out at. The reason that we've got this alert at 1850 is that I would like to see all this noise and these consolidations lows taken out before entering a potential trade. There's still very much a large risk to reward because we would only need to place our stop loss above either a fresh new swing or just above the resistance. So looking at a stop loss of around about 30 pips, 40 pips potentially for that first trade down to 1750, and then obviously from 1750 down towards 116.20 obviously opens up our risk to reward by quite a lot. So there's a lot of potential surrounding this pair. Like I say though, if we pop back above 1920, then that is the time to start getting rid of a short bias, looking towards potential long positions on the pair. Gold is in a similar situation, just on a much grander scale. Gold, we need to see this 35 region taken out. We need to get below these previous lows in this consolidation zone. Until that happens, there's not really a trade. Anything else would be drastically early entries. Much like EURUSD, yeah, we can get below 1880, but what's the point? We'd rather wait and see the higher probability entry. With gold, we can get in at 1740, but we would much rather wait and see the higher probability entry. There is so much potential for it to drop to 1 to 17 whole number once we get through that region. For the sake of 350 pips, why are we complaining or whinging about an extra 50? We will just wait it out. Pound New Zealand, for the sake of the extra 30 pips, what's the point? We will just wait it out. EURAUD, a similar situation. So all of these pairs, all of these trades at the moment are in similar zones, similar circles, similar situations, in the sense that we need to see just a couple more pips go. We need to sit on our hands, not try and rush early entries. Just let these things go, let the key levels be taken out, and then obviously go from there. Dollar Swiss, I think, is the last one that I need to cover this morning. There are a couple more, but that's the last major one. So yeah, with dollar Swiss at the moment, obviously we're very much still trapped in this little zone, so this little bubble. So back above 93.20 gives us back to 93.80. 20 to 80 trade, lovely position. We would need a real tight stop loss, so that would be my preferred option. Plus, obviously, it plays in quite well with EURUSD and gold shorts as well to see that dollar strength come back in and dollar CAD to the upside. No, I've gone through dollar CAD either. Today's going to be a long morning. With the Swiss franc at the moment, obviously we're starting to see that sell-off, and obviously that plays in quite nice, will play in, should I say, with the potential for Swiss yen also. So if we see a push to the downside and we break through 92.30, then obviously we have that potential short. Now, this similar situation than what we had with New Zealand USD, where we have quite short initial target, so 91 down to 91.90, 91.80, that kind of area. That's where we need to get through. Once we get through, then obviously we start to see much bigger and sharper sell-offs. But this is the gateway to that at the moment, and certainly on the lower time frames is an area where we can look to take advantage of. If we can break back below 92.30, then we can take a short down, bank the 40, maybe 50 pips on the way down, then obviously look to come out of the position and see where we go. The fact that obviously we've been trapped in this range previously for quite a long time suggests that it might be a tough task to get through 92.30 as things stand. Also above 93.20, back to 93.80. Then obviously we can go further than that in extension, but again, getting above this region seems to be a little bit tough, and therefore when this zone goes, we're likely to see some form of movement. Again, it's that surrounding that Swiss franc. Once this area goes, once these areas have been broken, then we're likely to see quite sharp movements and situations. But until they go, we just have to sit on our hands and sit on the sidelines and wait. I can't remember if I've done dollar CAD or not, if I'm honest. So we'll just run through and have a very quick look at dollar CAD anyway. With regards to dollar CAD at the moment, we again in a little bit of no man's land, but I do quite like the position. 26.80 holds a lot of the keys here to potential upside. Yes, we can get involved a little bit lower, but what's the point? We can get involved at 126 if you so wanted to. 126 up to 126.80 or 127 is quite likely. Once that goes, obviously, we see large pushes to the upside. For downside potential, I would want to get through 125. If we can get through 125, you got the 50 pips down to 24.50. Then from 24.50, obviously down towards 123.50. But that 24.50 region has been key. That's been vital. If you remember back to when we were trading in and out of dollar CAD earlier in the year, that 124.50 region was our downside target for a long time. So it's only right that is playing vital and key to any potential movements further. But as things stand at the moment, I would envision, personally, I would like to wait until 127 goes. That might not happen, and if 126 is taken out, it might just be worth taking the earlier entry from 126 to 127.80 and seeing where we go from there. But yeah, there's a lot to keep an eye on, a lot of alerts set, and a lot to watch for. So just be mindful. Fundamental wise, is not a huge amount. Like I say, there is CAD data out a little bit later today, but in truth, there's not too much that should see major movements. I think realistically, there's business confidence for New Zealand that will be at some point through in the late hours of today or early hours of tomorrow morning. That's probably likely to give us some movements as we move into the rest of the day, into tomorrow and into the London session tomorrow. But apart from that, there's not too much going on. So just be mindful of the levels that we've spoken about, and like I say, I'll catch up with people a little bit later.